perspective. So in my mind, the SME instrument can really de-risk companies that are just in between their seed stage of financing. They have a technical idea, they show that prototype level it works, but they don't really have clients yet. And for these kind of companies, it's very difficult to get professional investors to invest because investors want to see traction. So at the European Commission, we provide support for companies through financing to basically bridge this gap between technical prototype and then in the end actually having customers and getting professional investor on board. So that de-risking is basically the time that you have to find your product market fit, to get your first reference customers before you're able to get a professional investor on board. By de-risking, I mean basically from the investor's perspective, because I've always been an investor, to make sure that the company has a product market fit, that there's somebody that will buy their product. And that's, especially for AI companies, I believe the biggest challenge, to find this product market fit. To find a segment they can tackle and to figure out how far in the value chain do they want to go. Do they just want to be a technology supplier, then selling to somebody else, or do they want to actually build a full stack product facing the end customer? And for instance, in the case of Omnius, the company decided to go almost full stack together with the insurance companies. But it also took some time to find this product market fit, and I think that's what the SME instrument is for. The insurance companies of today, yes, they obviously want to have the contact with the end customer because that's where their value is. But we see new cases like Lemonade that are actually replacing the entire value chain. So I would say there's place for both, but for big insurance it's interesting if a supplier is providing technology that they could implement. I do think Lemonade is shaking up the game because they have just so much more automated in the entire value chain that it's possible to actually provide real savings for the end customer. So it's able to automate policy making, calculation, claim management with help of companies like Omnius. So I do think that they're disrupting. I think it's extremely challenging. Honestly, last year, US spent around $24 billion on AI research, Europe about 3 to 4, and similar figures to the US are in China. Activities in the US and China are very focused. In Europe, it's segmented between Germany, France, Sweden. So I think if Europe were to succeed, we would really need to get together and invest some proper resources. On the other hand, just last week, there are two things that I think are very positive for Europe, two announcements. One of them is European Commission's high-level expert group, which is going to help advance building a European AI ecosystem. So far, it's mostly a political body, but I think it's a good start. And second thing is the European Commission announced that there's going to be 100 billion budget to invest in high-tech companies in Europe, which is comparable to SoftBank's Vision Fund in size. It's 100 billion. And one of the areas where we're going to invest from this 100 billion is AI. So it's not an AI dedicated budget, but one of the priorities will be AI, and there's significant budget that will support it. So that's super positive.